mark here in terms of our distance away from our previous day's 4 o'clock close. And when we're more than 30 handles away over the last 180 days, we've only filled 32% of our gap fills. Now, if we do fall below into the 30, it becomes more of a coin flip. But the question that we're going to answer here this morning is what would lead us into that 32% probability, which again is not an edge, but back into the bottom of this range. And the answer to that question lies with the leading indicators here. And we're going to first start off with the DXY chart. Now the dollar ran us right back up into a resistance level here. And this is the dollar strength trade that we are watching out for as we are going into the morning. Great move. The euro made it too. You can see the euro running from its resistance level. This wall of resistance we had in the morning is run right back down into its long from lows. We're actually starting a dollar weakness trade right now. Now, that dollar weakness trade is mostly associated right now with a rally inside of the currencies and the commodities. You'll notice here that there's a neutral correlation on the indices. So we're not expecting that the dollar has any influence over the indices, but it is very bullish for the Aussie dollar, the euro, the British pound, WTI, gold, silver. Bitcoin is a positive correlation. When we're looking at this in relation to our VIX chart, we are inside of, interestingly, we're still inside of a pullback. And this is the old contract lows to February contract highs that we ran into support on Monday. And then Monday, we defended a pullback, and we have not broken the 61.8% line. Now, there are no shorts on the indices. There are no 50% shorts on the indices, but every time the VIX is defending a pullback like this, it can drag the indices down. And the question is which VIX contract is most relevant right now? Well, you can see that there's a slight edge in the March contract. Yesterday was rollover. Next week, Tuesday going into Wednesday, is the expiration of the February contract. So we see a little bit more volume inside of the March contract than we do inside of February. The reason that we still have to pay attention to this being a potential top of a range on the indices is because, one, it's been a range up until this point. And the second reason is that the VIX is still defending a variation of a counter trend long from lows in a series of pullbacks. And so as we're going into our morning, if there was going to be still a potential for the indices to fall back out of the top of this range and fill their gap, which is still below us here. Where's the unfilled gap? It's all the way down at our support. It's down here at 61.75. If there was going to be a run back down into the bottom of this range again, it trading back down into our unfilled gap from yesterday, then what would it look like on the VIX? Well, the VIX would defend above these 1910s. 1910s breaks, if we were to go through that, if we had already gone through that, we'd be anticipating a pro gap up and go. And don't get in the way of it. Old resistance becomes support. We're breaking out to new highs. But we haven't seen that yet. We haven't broken through it yet. And so this just is still just a range. At least as of right now, it looks like just a range. And so there's still a potential for, if we're holding above the 1910s, again, that's 1916, rounding down to 15, adding a tick. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.